Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of what goes on behind the curtain of big companies. In this video, we are diving deep into Immunic Incorporated's latest financial report. Get ready because this biotech company is navigating some really interesting and frankly challenging financial waters. Make sure you are subscribed because we are all about cutting through the jargon to give you the real story. And hey, if you want to dive even deeper into these discussions, come join our Discord community, linked in the description below. So let's get right into it. Immunic Incorporated, or Immunic Inc. as they're known, has just released their quarterly report for the period ending the 30th of September, 2025. This is a late-stage biotechnology company focused on developing new medicines for brain and gut diseases. They have a couple of promising drug candidates in the works like vidofludimus calcium, which they are testing in clinical trials for multiple sclerosis, and Immunic 856 for gastrointestinal issues. Looking at their balance sheet, Immunic has total assets of about $40.7 million as of the 30th of September 2025. That is pretty much unchanged from the end of 2024 when it was just over $40.8 million. So no big shifts on the asset side. But here is where things start to get a bit more interesting. Their liabilities are a different story. Total current liabilities jumped significantly from around $22.1 million at the end of 2024 to over $30 million by the 30th of September 2025. That is a big jump in what they owe to others in the short term. Now let's talk about the big picture. This company has a serious accumulated deficit as of the 30th of September 2025. It is a massive negative $589.3 million. And at the end of 2024, it was already at a hefty negative $511.4 million. This basically means they've lost a lot more money than they've made since they started. They are burning through cash to develop these new drugs. And that brings us to their results of operations. For the 3 months ending the 30th of September 2025, they posted a net loss of close to $25.6 million. That is a bit worse than the same period last year when the loss was around $24.4 million. Zooming out to the 9-month period from January to September 25, their net loss was about $77.9 million. That is a slight increase compared to the same period in 2024, where they had a net loss of about $75.3 million. A big chunk of this loss comes from research and development. For the 9 months ending the 30th of September 2025, they spent nearly $62.9 million on R&D, that is up from about $58.4 million in the same period last year. Again, this is the cost of developing new medicines. Their general and administrative costs also went up. For the 9 months ending the 30th of September 2025, they spent almost $17 million on GA, that is up from about $14 million in the prior year. This increase is due to more personnel costs and higher legal and consultancy expenses. Now, let's talk about cash. As of the 30th of September 2025, Immunic had about $35.1 million in cash and cash equivalents. This sounds like a good amount, but remember their burn rate. They're losing tens of millions each quarter. For the first 9 months of 2025, they used $66.5 million in cash just to run their operations. That is more than the $61.8 million they used in the same period of 2024. Where did they get the money to cover these losses and operational cash burn? From financing activities. In the 9 months ending the 30th of September 2025, they actually brought in over $65.5 million from financing. This came mainly from their April and May stock offerings. Looking back at 2024, they brought in almost $74.5 million from their January financing event and other stock sales. They had a pretty big offering in May 2025. They sold pre-funded warrants and accompanying Series A and Series B warrants. They raised about $65 million from this. And if investors exercise all those warrants, they could potentially get another $130 million. This is a common strategy to raise cash when you are still in the development phase. Then there was the April 2025 offering where they sold about 5.67 million shares of common stock, bringing in about $5.1 million in gross proceeds. They also issued placement agent warrants in that deal. Going back to January 2024, they had a significant financing event, raising $80 million initially. They had options for 2 more tranches totaling another $160 million, but those expired without being exercised. It is good they got cash, but those additional funds did not materialize. Now let's talk about a significant risk factor. Immunic received a notice from Nasdaq because their stock price has been below $1 per S-share for over 30 consecutive business days. They have until the 24th of December 2025 to fix this. If they don't, they could be delisted from the Nasdaq Global Select Market. This is a serious issue because being delisted can hurt the stock price and make it even harder to raise money in the future. They are considering switching to the Nasdaq capital market, but even that has its own set of challenges. Let's look at compensation for the 9 months ending the 30th of September 2025. Immunic recognized over $7.5 million in stock-based compensation expense. That is a significant amount, especially for a company that is not yet profitable. This is how they reward employees and executives with stock or options. And then there are the stock appreciation rights, or SARS. They granted up to 35 million SARS in July 2025. These are basically a right to receive the increase in value of the company's stock. They've recorded about $1.5 million in compensation expense for these, and there is still about $7.8 million in unrecognized compensation expense. This is a big part of their compensation structure. Looking at their stockholders' equity, they have accumulated other comprehensive income of about $2.6 million as of the 30th of September 2025. This mostly comes from foreign currency translation adjustments. Their European operations mean they deal with euros, and currency fluctuations affect their reported equity. Back to stock options, they had over 25.7 million stock options outstanding as of the 30th of September 2025. The weighted average exercise price is about $1.21. This is important because if the stock price goes up significantly, these options could become very valuable to the holders. There is still about $13.9 million in unrecognized stock. Base compensation expense related to these options. So, what is the story here? Immunic is in a very typical position for a late-stage biotech company. They are heavily investing in research and development, which is causing significant losses and a high cash burn rate. They are relying on frequent stock offerings to stay afloat. The big jump in current liabilities is a bit concerning, suggesting they might owe more to suppliers or have more accrued expenses. The Nasdaq listing risk is also a major red flag. Overall, Immunic is pursuing promising drug candidates for serious diseases, which is great. However, the financial picture is precarious. They have a substantial accumulated deficit and no product revenue. Their ability to continue as a going concern hinges on their ability to secure more funding and regain Nasdaq compliance. If they can navigate these challenges, the payoff could be huge, but the risks are also considerable. They are fighting to bring life-changing medicines to market, but the path is incredibly expensive and uncertain. Alright, that is our deep dive into Immunic's latest financial report. What do you think about their strategy and financial position? Let us know your thoughts in the comments below. If you found this analysis helpful, please hit that like button and subscribe for more corporate breakdowns. And don't forget to join our Discord community for continued discussions. Thanks for watching, and we'll see you in the next video.